I wanted to show you something in looking at this form here. I think this is a nice way. I've enjoyed using this form over the years because it actually shows something about the flow of the values in the financial statements. At the end of the year, do you remember which of the statements you prepare first? You got the balance sheet, statement of owner's equity, income statement, statement of cash flows. Which one has to come first? The income statement. The income statement. Why is that? Because you need this to be able to do this. Okay? So, and this could come conceivably second. Because there's something here you need, namely retained earnings, to do this, isn't there? So this actually shows how the amounts, how the information flows, let's say physically, because it's not a physical flow, but logically, conceptually, in that you do the income statement because net income feeds into the statement of owner's equity or statement of retained earnings, and then the ending retained earnings balance plugs in here into your balance sheet. Now, let's look at the, and by the way, I guess I show that through this, there you go. Net income flows into, it should be down here. Well, not right there, sorry. It looks like my arrows have gotten off somehow when I moved some things around. This flows into that. This flows in right there. And there's the amounts. Tell me where you started with this. Hannah, where did you start?
Started at the income.
Okay.
Start at income statement.
So you know the relationship here is revenues. What do you do with expenses?
Subtract.
Subtract them to get this. And so you kind of had to back into that, which was 60,000, wasn't it? Okay. So let's do the Kimberly. What did you do next? Did you get that first too? Okay. What did you do next?
Retained earnings.
Retained earnings. Okay. So you plug this in there, and then you back into this number. Tell me about the relationship between the beginning and the ending balance. What do you do with net income? You add it, okay? It's a positive amount. If it's negative, then you would add the negative, essentially. So add 40,000. What do you do with this? Subtract it, okay. So you added 40, subtracted 50 to get this. Now, we're having to back into this number, aren't we? So one thing you might want to do is look at the net change. What happened to retained earnings over the course of this year? It went down by 10,000, okay. So whatever this is, X minus 10,000 gave me 120. So what did this have to be? 130, okay. Now I bet some of you got 110 on that, or some other number because you weren't sure, maybe, or you backed into it the wrong way. But I think it's helpful to look at the net change. How did retained earnings change? Well, if this was 40, this was 50, then it fell by that 10,000, didn't it? Now, is it possible for a company to pay out more dividends than its earnings in a given period? Is it possible? Yes. Okay. Unless there's some kind of a stipulation, and there may be, in a company's bond indenture. That is, the contracts it has with its bondholders. It's a fairly common debt covenant that the company can only pay dividends out of current year earnings. But there is no theoretical reason that they can't do that. It's only a matter of a condition that's imposed on the company by its bondholders, or by the trustees for the bondholders as part of their agreement. So anyway, so notice you know already, the relationships within these statements. Revenues minus expenses gives you this. You know how to get from beginning to ending retained earnings. So you know this is an additive item, that's subtractive. Okay. What about down here? So this guy here feeds in right there. So what did the paid-in capital, common stock and additional paid-in capital, what did that balance have to be? 80,000, okay? So this is 120, so you know that these two have to sum to 200, okay? So I have people lots of times saying, I got into accounting because I love math, Well, there's not a lot of math. Well, let's say there's a lot of numbers. And you have to have a facility with numbers. I had a student some years ago. She was an accounting major, at least through this, into second intermediate 2, and it just dawned on me that she wasn't comfortable with numbers. I mean, I would give her, actually it happened like this. There was we were doing stock issues. I said, you got, the company's issuing 15,000 shares of stock for $10 a share. How much is that? She was like, you have to grab her calculator. I said, no, don't use the calculator. This is 15,000, shares of stock, $10 a piece. And she couldn't get it. And I said, actually, I think it was like $100 a piece, 50. I said, what if it's $10? And she still couldn't get that. I said, well, it's $1 a piece, $1 per share. She said, oh, $15,000, okay. And then through some other discussions and things, it just dawned on me, you don't have to be a math whiz to do accounting. It's not like it's calculus or anything like that. But if you don't have a facility with numbers, if you have to grab the calculator for everything and it's a struggle for you, you're going to be competing with people that don't have that handicap, that difficulty. And so you need a facility with numbers. And part of that is going to come with you imposing that discipline on yourself. If you're inclined to grab the calculator for every single calculation, get out of that habit. At least try to think through it, because it's like any kind of exercise, okay? Mental exercise. You'll get better at it if you do it. We were in Japan, and a number of things impressed me about the Japanese culture. You can go into any convenience store, and they will count out the exact change, in their heads. They don't have to plug it in so that it tells them how much change to give you back like we have here. Another thing that impressed me so much is just the politeness, and that you experience. Even a toll booth on a toll road, toll booth attendant, will sit there and bow. It's really pretty impressive. So where do you go from here? I'll let Mike. Oh, right there. How much time do we have? 10, 12? And we've got, is it 18 minutes we've got? 8 minutes. Okay. Oh, we're okay. Well, let me show you where this goes, because I got another type of problem I want you to see, but I think it's pretty straightforward. This is going to be how much? 80. This is a little bit harder, but how do you get to this?
300.
Yeah, you can't go straight to that, can you? You need this, which is, again, 300. Okay, so that has to be then 30. Okay? Now you've got, what I want you to do for next time, first type of problem is to finish these other ones. Oops, those are the solutions. You don't get those yet. Finish those problems. And then I got another type I want you to see here. Let's see, statement of cash flows we're not going to spend much time on. And this is we've already covered in other places. Just turn to your notes if you would. And let me get and I'll work through one of these with you. I think it's in your notes is the problem, or the question that I want you to deal with. Let me see if that's it right there. Oh, yeah. There we go. Have you got another problem in your notes? Let me see. The accounting overview. There it is. I think that's one.
Last page.
Okay, I thought I had given you one back in the narrative part here, but okay. Well, let's do the first one of these in your assignment for next time will be on the last page of your notes. To do this, I'll hold this. Let's see, can you see that? Oh. It stays here. Oh.
No, it really
Except
does.
it's going to be on here. Okay.
Post it to YouTube. You'll get more views that way.
For all the world to see. Let's see. Okay, during 2017, Have No Inc.'s assets rose by $8 million, liabilities rose by $4 million. During that same year, it repurchased $3 million of common stock. Assuming net income for the period of $12 million, what was the amount of dividends declared that year? I bet you need a little help with formatting this, but there is a simple format I want you to use that will be helpful in all these these other problems. Whether it will be the same for all other problems. Let me slide this guy down a little bit and get this guy out of the way. Okay. Here's a very simple format for this problem. There's assets, liabilities, equity. And under equity, we have two basic components. We have PIC, that stands for what? Paid-in capital, and we have RE, retained earnings. And over here, I want you to set up a simple, well, I don't know that we need that, anything more than this. This problem here is going to focus on the changes that occur over a period of time. And so we're going to focus here on you're going to be given information on changes in assets, changes in liabilities, changes in equity. Of course, this is where the difficulties are, because equity, first of all, you can have changes in paid-in capital and changes in retained earnings. And changes in retained earnings we see as actually the result of something further still, right? You can imagine net income in a given problem, you might be given revenues and expenses, so you have to solve for net income. But these problems, they're more basic than that. Let's read this one. Assets rose by $8 million. Let's fill in what we know here. I'll just put it like this. There's 8, okay, plus 8. Liabilities rose by $4 million, okay? I'll leave it at that. What happened to equity? Do what? Say that again?
$3 million in common stock.
Okay, but I mean overall, what happened to equity? Yeah, the balance sheet has to balance, right? Not just in ending values, but in the changes that occur. The only way it can stay in balance from the beginning to the end of the period is if, in fact, the changes balance. So overall, equity had to rise by 4 because the right-hand side has to increase by the same amount as the assets, right? Now, go ahead, Kimberly, what were you telling me? Go ahead and help me plug in these values. What happened here, paid-in capital? Well, that's where stock issues or stock repurchases are going to be reflected. If we have a stock issue, that's an increase. If we have a stock repurchase, that's a decrease. Isn't that what happened here? It repurchased $3 million of common stock. We're going to represent that as a negative 3. Now, we don't know about retained earnings because they're giving us some components here of what happened. We're going to figure out what this is. It's asking what was the amount of dividends declared. Now, actually, I know what happened to retained earnings. You know, without even knowing this, okay, what did happen?
Would have to go up 7, right?
Went up by 7, okay? Because again, these are the two components of shareholders' equity. And so shareholders' equity rose by 4, and one of those components fell by 3. The other must have risen by 7. Does that make sense? And so we know this retained earnings went up by 7. This is the connection there that we've seen before, basically between the income statement and we've got the stockholders' statement of owner's equity kind of compiled here, don't we, or included in this way. So I know, what else have I got here, Catherine, I need to plug in? Net income, and what was it? 12, okay, now that's a positive amount, right? Okay, net income was 12 million. The question is, what happened there? What were dividends? 5 million, that's right. So there's the answer to that question. Now, all the rest of these other 3 are going to use that same format. You simply plug in what you know, and you solve for what you don't know based on the relationships that exist. This is really practical. I mean, this is one of those things. You can get all bogged down if you want to in a company's financial statements and still not know essentially what happened. We're going to work on, as we go on, some various tools for being able to make some common sense judgments or observations about, you know, whether a company was profitable, whether it was, you know, whether it was unprofitable, whether it is growing or whether it's not growing, and whether it's, let's say, its liquidity.